Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magd.com. For Elliott Wave Trading, www.24elliottwaves.com. The title of this video is How to Count Elliott Waves, Guidelines number 6. Alright, let's get started. Alright, we have looked at guideline number 1 to 5. Okay, so I hope at this point in time you have improved your wave counts. Alright, so in this guideline number 6, it's a situation where, okay, the fourth wave is overlapping, okay, the first wave. This is a violation of the wave principle. The fourth wave should not come into the range of the first wave. I want to show you what you need to look for, all right, if you are counting in your wave, and to avoid this messy situation sometimes, so you do not count your wave count, okay, wrongly, okay. The situation where the fourth wave is overlapping the first wave usually takes place when the first wave is extended, followed by the second wave, and also the third wave is equal to the first wave. This is bringing us to the pattern that we call ABCD chart pattern. ABCD chart pattern. Go to stochastic-magd.com, check the videos about ABCD chart pattern. So you will see sometime when the first wave and the third wave is almost equal, or the first wave, you will see that the first wave is extended, all right, and followed by the second wave, and then the third area where it's extended maybe will go a little bit higher than the first wave, a little bit superior, so it will be a little bit longer than the first wave, but suddenly we see that the price changing direction. There's a situation where you will see sometime when the first wave will be equal to the third area wave. In that scenario, there's a high chance that the fourth wave will overlap the first wave, which will cancel our wave count. The point I want to make here to traders, which is very, very important, all right? You see here, we are looking at Home Depot, all right, on the monthly chart. Recently, I have counted 5 waves here, and I said to traders to be careful that the price may find a resistance at 10647. Now, finally, it went above it, okay? This is about using a trading drill to manage the trade, okay? Trader was selling, and for 1 month, the price went down. Now, it pushed it back up, okay? The point I want to make, so usually you will see that there will be a multi-wave. So the first wave will be extended, okay? You will see that very often on a monthly chart, even a weekly chart, okay? So the first wave will be extended, formed of a 5-man wave. It will be a complex. If you see that, the first wave will be a complex wave, followed by a correction, okay, and then a new, okay, impulse will start here. So you'll be counting this as the third area wave. But as the third area wave is pushing it up, because the first wave has been extended, all right, the market duplicate the length or the magnitude of the first wave, which means the first wave is equal to the third wave, or the third wave is just a little bit, okay, higher than the magnitude or the length of the first wave, forming a kind of ABCD chart pattern. All right? If that's the case, very often you'll see that when you are expecting, because you are just looking at it, you say, okay, first wave, second wave, okay, third wave, all right? Maybe you don't know anything about ABCD chart pattern, but the market know about it, all right? So the market said this is ABCD chart pattern. Sometimes you will see that the third area will be a little bit longer than the third area wave, because in theory, for the pattern that we call ABCD chart pattern, in theory, the distance from A to B should be equal to the distance from C to D. But sometimes the distance from C to D will be longer than the distance from A to B. So do not assume that the distance of A to B will be exactly equal to the distance from C to D. It may be extended. So you will see sometimes that the distance between the A to B will be exactly equal to the distance from C to D, talking about the ABCD chart pattern. Traders that are counting area wave will be saying first wave, second wave, and then we will be saying this is the third area wave. But suddenly the price will start going down, and you will see, so you are expecting the fourth wave, you are expecting the fourth wave to be shallow, But because it has taken too much time, the market is watching how long this trend has been in place. Maybe it has been in place for years, so they want to bring it down. The long-term investors are divesting, and you will see that the price will come into the range of the first wave. So your expected fourth wave, okay, will come into the range of the first wave. All right. So if you look on this monthly chart of Home Depot, you see that this here, from here to here, the price went up. So this is a one, okay, motive wave normally, okay. Suppose you don't know about motive wave, you know about A, B, C, D chart pattern. So you say this is A, B, C, D. We are the D session, all right. So trader who understand the A, B, C, D will check the distance, okay, something like that, put it there, all right, okay. They can also use the magnitude of the AB magnitude. We are talking about dollar move, vertical like this, dollar move like this, and they will put it here to set their target. Okay, you can see that it went a little bit above it. There's no equality between this move from here to here, but it's still A, B, C, D. But for a trader that is counting Elliott wave on the monthly chart, he or she can say that, okay, this is a multi-wave, or this is the first wave, second wave from the 1, 2, 3, all right? And this is the third wave, talking about the bigger cycle. But this move from here to here has been divided into 5 waves, has been extended for many years, from 1990 to 2000. It's a multi-wave. Now there was a correction between 2000 to 2009. Now a new trend has begun. Okay, all right. So this is a big. You may see this very often. You see this on a monthly chart when you see A, B, C, D. This is what is happening here. All right. If the price found a resistance here and start going down, be careful. It won't be a shallow. Okay, it won't be a shallow correction. It may come into the range of okay, the first wave. Okay, which means the fourth wave. Your expected fourth wave. Okay, will be, okay, into the range of the first wave. But what is happening, you need to understand this. The ABCD chart pattern is in fact, okay, a double, okay, it's in fact a double Elliott wave cycle. Let me explain myself to you. You will see that sometime on the monthly chart. So from the A to C, talking about ABCD chart pattern, that's one Elliott wave cycle, okay? All right. Now, as I explained to you in guidelines, how to count Elliott wave, guidelines number 3, end of one Elliott wave cycle, a new cycle has begun here. Are you with me? Multi-wave correction. A new cycle has begun here. 1, 2, okay. Second wave complex, third wave, fourth wave, fifth wave. So from the end of the previous cycle, guideline number 3, a new cycle has begun. Now remember the ABCD chart pattern, because this is a bullish trend that has been in place with a correction here. It's still going on now. If the long-term investor had enough and they want to come out, there's a high chance that when the price starts going down, it may go into the range of the first wave, which is a violation of the Elliott wave principle. But what I want you to remember, when you see this like this on the monthly chart, A, B, C, D, which has been seen since 1990 up to now, still up move, okay, all right, went higher than this one now. So when they are coming out here, forget about Elliott wave. Remember instead the ABCD chart pattern. Sometimes you will see that the price will come, okay, and stop here and find a support. If the fundamentals are solid and the market sentiment is bullish, which means this is if this stock is a dynamic bullish stock, it may pull back here. But what we have seen very often, talking about wave count, a lot of Elliott wave traders get into trouble because they say this is 1, 2, 3, and they're expecting a shallow fourth wave, but to their biggest surprise, they probably go into the range of the first wave, which is the violation of Elliott wave principle. I hope you learn something from this also, and we put it to use to improve your Elliott wave count. We are the TSTW 24 traders talking about how to count Elliott wave, guidelines number 6. This is the end of this series of video. Okay, guideline number 1 to number 6. We have talked about different scenarios, how one will be able to count Elliott wave like a pro. The most important part is to be able to count, to identify the first Elliott wave. But sometimes we have seen also that the second wave can cancel the first wave. If that's happened, what do we need to do? This is about, okay, different guidelines that we have discussed. What should you need to do? Guidelines, okay. Number 4, if, okay, the second wave has canceled, okay, the first wave. Guideline number 5 is about, okay, the third wave has failed, all right, you need to know that, how to count Elliott wave as a sacral point. The first guideline, breakout of a consolidation zone. The guideline 6, it's a bigger cycle formed of ABCD. There's a high chance that you're supposed or you're expected for wave will go into the range of the first wave. Thank you for watching, and we will speak to you very soon. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down, but put a comment below. This will help us to improve, okay, our tutorial. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about how to count Elliott waves, guidelines number 5. End of this series of video.